Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
If you're interested in multifamily real estate but don't know how or where to begin, our guide on how to start investing in multifamily real estate breaks down everything you need to know about identifying good investments plus real-world examples. Download your copy in the show notes or visit lifebridgecapital.com/start now to start your journey in multifamily real estate. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Stuart Moore. Thanks for being on the show, Stuart.
Whitney, thanks for having me. Glad to be here.
Yeah, great to have you on the show. Insurance is something that is so important in our business and really probably in any business, most anyway, especially if it's dealing with real estate. But a little about Stuart. He joined Turner Wood and Smith Insurance in May of 2012 as a property casualty agent in the commercial division and became a partner in 2019. He's a graduate of Auburn University, was named captain of the golf team and twice selected to the All-SEC golf team. Stuart specializes in multifamily insurance and can insure properties in all 50 states. Stuart, welcome to the show. Give us a little more about your background, but let's dive into some insurance issues, whether it's success stories or pitfalls, that our operators and investors that are listening need to know.
Yeah, so like you said, there I started, got into insurance, kind of fell out of the golf scene and fell into a friend that had an insurance shop and really never planned on getting an insurance. It just kind of happened. And to get into the multifamily, had a good friend who's in the property management business, and he started sending me clients. And then from there, it's just kind of grown on referral basis. And it's gotten to where the last 4 or 5 years, it's probably 90% of the business that I write is in the multifamily sector. So, it's been a good time to be in that business. We've cut our teeth on the Fannie and Freddie requirements and all that stuff. So a lot of different markets and carriers that we use, and we haven't insured everything in all 50 states, but I haven't seen any properties in Hawaii yet or Alaska, but be glad to go see them if we need to.
Yeah, no, that sounds like a fun trip, a business trip, right?
Right.
That would be a lot of fun. Well, let's jump in there a little bit about, obviously you are majority now you're working with multifamily operators, multifamily properties, insuring those deals. And but let's talk a little bit about, having a provider like yourself that operates just with multifamily or the majority multifamily anyway, as opposed to someone that's, say, writing our insurance for our home or cars or things like that, that's also trying to insure multifamily. What are some differences that we need to be aware of in that insurance provider?
Just as far as knowing the marketplace, and the biggest thing that we run into is when you start dealing with Fannie and Freddie and or Bancorp or Arbor, just knowing what their requirements are, knowing that you're going to have a $3 to $5 million umbrella, or you're going to have, I think they've up to 15% for ordinance of law for different carriers, where if you just go get a quote, anybody can run an insurance quote through a Travelers or a Nationwide system, and it looks great, but then you may get to the closing and you may say, oh man, we need this and we need this and we need this. And next thing you know, it's $5,000 to $8,000 more, and that's blowing up the closing, and everybody's mad about it. So that's really the thing is knowing the marketplace, and then the requirements. I'll leave it at that for right now.
Yeah. What are some of those requirements though that we should be aware of, or anything that maybe is often overlooked by an operator?
Well, the biggest thing that we see is just figuring out what value to insure it for. The lenders are always going to have their requirements. The insurance company is going to have their requirements. Usually, I shouldn't say usually, a lot of times the replacement cost that the insurance company thinks is going to be more than the lender. And you've got to explain that to somebody that, hey, well, it appraised for this. Okay, well, the insurance company's they want to insure it if they have to build it back. So you get some discrepancies there. Then, just on the business income side of it, the amount that you have to insure, the umbrellas, they keep going up. People keep needing more and more of them. And then one stickler is just ordinance and law. Whereas if your building burns down, you need coverage to build it back to code, the current code. And lenders, that can be expensive with some carriers. Some carriers will throw it in. It really just depends. But if you don't know that you need it, and then it gets down to, 2 days before the closing, and they're like, you don't have any of this, it can really, really put everybody in a bind.
Of course. As far as, the number that you're trying to come up with and you're thinking about, being able to build back, right? I was just thinking through that. Could you just elaborate on that a little bit as far as when do we need that level of insurance? I think a lot of people think they have like insurance is just going to cover to build it all back, right? The way it was, but that's not always the case, right?
Right. Yeah. And it keeps going. It keeps going up. I mean, you keep hearing about the price of lumber and the cost of construction keeps going up. A few years ago, it seems like you could get carriers that would insure things we look at it on a per foot basis, and it'd be $60 or $70 a foot, which is just crazy. Well, now most people are $100 or up to even $120 for newer stuff, which to me still seems kind of low. But I mean, you've got other coverage in there for the debris removal and things like that. So you're not obviously building it from the ground up. But, it keeps increasing. And like I said, we run into that with people, especially buying new properties. Well, they get an appraisal and say it appraises for $8 million and we're trying to insure it for $12 million. Well, they want to know why do I have to insure this for $12 million? Well, if a tornado comes through and knocks the thing down and you got to rebuild it, you're going to be happy you had $12 million as opposed to $8 million.
Yeah. So help us. Maybe that's a good place to talk about too. It's like, I can understand that argument because the insurance cost of say a $20 million project, I mean, it can make or break a deal, right?
Right.
It can change the value of that property so much. But how do we think through or justify, say, that $12 million purchase price, or not purchase price, but value associated with insurance versus, the $8 million, purchase price, or, at that time when we're thinking through, having to build this back, or I don't know. I was just trying to get that in my mind or even in the listener's mind, because I know that's a struggle for many people when they're trying to evaluate insurance.
Yeah. I mean, the biggest thing is just, like I said, we look at it, and most carriers do, on a per square foot cost. So, we're, like I said, just to go out and buy the property is completely different than if the thing's knocked down and you got to rebuild it from the ground up. There's just more costs involved. So it's the same thing with your house. A lot of times it appraises for one amount and you pay more or you can pay less. It just kind of where it falls. But with multifamily, it's gotten a little better with the lenders. But I mean, sometimes you see lenders, and a lot of times that can depend on the loan size too. They just want to make sure their loan's covered back if something happens. So it's always a big juggling act. But the cost, usually most people, when you explain it to them, hey, if this thing is knocked down in a tornado, it's going to cost you more than $8 million to rebuild all this stuff, all these buildings. So that's where we try to sell them on it.
How does, how quickly does the lumber prices affect our insurance rates or just material costs? I started to get some quotes on building a barn recently, and numerous builders were like, if you had built this barn a year ago, it'd be like third the cost.
Right.
So, and obviously that made me start doing some more research just in material prices and how they have, it's increased so much over the last year. How quickly does that affect our insurance?
We haven't really seen it affect the actual price yet, per se. the market, carriers have different relationships with different people, and the market is so broad. I think it's kind of baked in there almost. Rates to me over the last couple years for us have been steadily increasing. But I told a client we had some renewals at the end of March. It actually went their insurance actually went down, which I hadn't seen it go the other way in a few years. So I'm really hoping for all the buyers out there, the property rates are starting to kind of level off a little bit.
What about some closing issues that you've seen, as far as, when somebody's working with, Freddie or Fannie types of debt or anything like that, as far as they didn't have the proper insurance, they didn't do proper due diligence around insurance, anything around closing issues that you've seen cause problems?
I'll tell you, one of the biggest ones that we see is flood. There will be a gray area on which buildings are going to be required to have flood. And it can come down to a lender call on, some of them will say if a flood zone, if it's touching the corner of any part of the building, you've got to insure the building for flood. Some of them you can get it, they'll work with you a little bit and be like, okay, it's very, very small portion, we're not going to do it. But the cost for flood is just all over the place. The national flood insurance, there have been private markets that have gotten in here lately that have helped out a little bit, but a lot of that, even though you can tell the buyer, say, hey, get some clarification on if you're going to need flood for these two buildings. The lender will say no, and then a week before the closing, they'll say, hey, by the way, you are going to have that, and then nobody's happy. It can be $1,500 a building, it can be $2,500 a building, and you just really don't know. So you get to closing and flood, even though you think you have it where it's supposed to be, it can change at the last second. Flood, and then umbrellas have gotten a little tougher, just the whole umbrella market, and not that you can't find it. It's just gotten a little more expensive once you get above $3 to $5 million, and a lender can make some different requirements on the umbrella, or even like we talked, the insurable value can change. It's just really, it can be really difficult, or you can think you have everything where it needs to be, and then something could come in last minute, like we actually need more of this, we need more flood, we need more umbrella, and then you look like the bad guy because it's going to cost them $5,000 more. But you're like, I'm just telling, we can't do this without the lender. So,
right. Stuart, a couple of questions. I wanted to go and ask you about flood just a little bit. So I just interviewed a guy who's an engineer. He helps with flood plains, things like that. And he talked briefly about even getting that changed, where, there's things that change that where sometimes they can get that updated. So, the property is no longer in a flood zone. I just wondered from your experience, how often you've seen that happen, or is that something you recommend, like hiring somebody like that to help you to figure that out? Maybe that's changed recently in this property or these buildings, are no longer in a flood zone. Absolutely.
I've got a good guy named, I don't know who's on your podcast, but we got a guy at Flood Experts named DJ McClure. If we
That's
have
him.
a flood, okay, perfect.
That's awesome.
He recently, last month, he reached out to me 6 or 8 months ago, and we had one that we thought was going to work, and it was 16 buildings, and it didn't work. So it doesn't always work, but then we had one last month where it saved the guy at his closing, and they got it done. They got the letter and released in 2 weeks. So I would absolutely recommend them, and we send them to a lot of our clients. Even if we don't know if there's an issue, you can send it to them and say, hey, what do you think about these buildings? They can do something online and get it figured out quickly and say, hey, yeah, we can help, or no, we can't. But they're very upfront, which is very good as well. So Yes. They have.
It's a small world. And that's interesting. As a listener, it'd be yesterday's show where,
Yeah.
you're going to hear DJ talking about floodplains, and potentially, getting that changed. And so talk about saving a lot of money, if that's an option, or maybe even properties that you wouldn't have pursued. Maybe you should pursue now if you have somebody, like Stuart or DJ on your team that can help you think through that a little bit. But now let's jump to the umbrella insurance a little bit, Stuart. You mentioned umbrella, when dealing with multifamily properties or any commercial properties like that, when should we consider umbrella insurance, or is it always, is it sometimes, and how much?
I would say always, at least $1 million, just to protect yourself. $1 million, a lot of times, it can be $500 annually. I would always recommend at least $1 million. You get up, depending on a lot of different factors, it can be a lot more expensive than that. But you get a run-of-the-mill property with no issues, $500. And I know we talked about the umbrella. I guess from the general liability standpoint, the biggest issue that we've seen lately, and it has to do with the crime score, is assault and battery coverage. So a lot of carriers now, they will Google an apartment complex, and if any sort of shooting, stabbing, anything of that nature pops up, they will want to sublimit your assault and battery coverage, meaning, hey, well, you've got $1 million for general liability, but if you have an assault and battery incident, we'll give you $250,000, and that's it. And that can get, at least around Atlanta and in Georgia, it can change based on judicial climates. Those are some real issues. You think about how many personal injury attorney billboards you see. If they have a assault and battery in an apartment complex, they are filing a lawsuit against the property owner for negligent security, anything. And you really do not want to be sublimited on assault and battery.
Wow. So assault and battery coverage. I don't know if anybody's talked about that before. And that's something, say, on a personal level that you should have. Or is that what you're saying? Or as the building, the property itself?
Just on the property itself. You just want to make sure on your general liability policy that it's not sublimited or it's not excluded. Because if you get it sublimited or excluded, obviously you're going to have a lot less coverage, and then it may not be picked up by your umbrella. So it's just become a bigger and bigger issue that we run into, where carriers are limiting it, or they don't want to provide coverage at all, because they can see, you can turn on the news, unfortunately, and see a lot of bad incidents that have happened. And you think, okay, if I'm a property owner and that happens, I could possibly get named in a lawsuit.
Yeah. Well, let's, before we run out and get too close on time, I wanted you to be able to talk about some pitfalls when reviewing, say, a quote policy. Often it's hard to understand a lot of that stuff, right? You get this big document and you don't understand a lot of it that maybe you need to. That's so important. Help us to think through some of the bigger pitfalls that most operators are probably overlooking.
Like I said, we just talked about the assault and battery. Make sure that's included, or that you're clear on how much you have. The other thing, and I like to tell the operators that I work with, when you are pretty serious, even before you send a letter of intent, send me the offering memorandum, and we can look at it pretty quickly and say, okay, it's in this area of the country. Just don't believe the offering memorandum. Get some advice from somebody who's written in that area, or at least can get some information. And if the offering memorandum says 100,000, and I run it past some people and they're like, oh, it should be 60,000. Okay, I'll go back to the operator and say, hey, figure out some loss history here. There's something going on that they're paying, 50, 60% more than they should. There's something going on there. I don't know if it's a fire, if there's a GL claim. There are just a lot of different things that you can overlook just by trusting an offering memorandum, or it can signal if this offer memorandum is $100,000 and they're telling me that it should be 60, or they're telling me it should 150. Okay, what else is going on in that offering memorandum that may not be what we think it is? So just some things like that where you can very quickly figure out, okay, there's something going on at this property with insurance, and I don't know what it is from what they're presenting there.
Has there been any issues, related to the pandemic, COVID, over the last year that have really that have altered, insurance in a big way?
I wouldn't say anything crazy. The strange thing for us was, just talking about COVID and the whole thing, is last March and April, everything was still bumming along because there were some deals in the pipeline that were closed, and there were a few people that complained about some terms that had changed maybe at the last minute from the lender. The insurance side, no. And then for me and our office, May and June was pretty slow. But I'm telling you, since last July, it has been absolutely gangbusters on the multifamily side. People have been closing deals left and right. It was a little worrisome there, May and June, but then, man, it has not slowed down at all. And like I said, I actually had some renewals where rates finally, I feel like, started going the other way. So I think it's a good time for multifamily. I think the worrisome thing in the beginning was just the rents and, the jobless claims and some things like that. But I feel like a lot of that has leveled off, at least in Georgia and around the Southeast. So it really has not. We haven't seen anything crazy from the insurance side. It's been just kept right on rolling.
So is there any around insurance you want to leave us with before we move to a few final questions?
No, I would just say the main thing that we mentioned earlier is, and even if it's not, obviously I'd love it for it to be me, but if it's not, just find somebody that has written multifamily and worked with agency loans and knows what you're doing. The offering memorandum, don't just take the word for it if you're about to make a deal. There's so many things that are going on behind the scenes. You have no idea what type of policy the current owner has. Ask them for the policy. And you may find out, hey, they've got a $500,000 deductible and they don't have general liability insurance. It's just, you never know.
Right. No, that's awesome, Stuart. Definitely need somebody like yourself on our team to help us think through those things. When we're talking about that kind of expense, it's very needed for any type of large deal like this. It can make or break it or a deal so quickly. So we need to know that as thoroughly as possible before we ever close on a project. So Stuart, do you have any daily habits that you are disciplined about that have helped you achieve success?
I would say more of, one of the best pieces of advice I got when I first got in the business was a guy that works with us. And he just simply told me, if you answer the phone and you call people back, you will write more business than you know what to do with. He said, you'll separate yourself from 90% of the people. But I do try to be very active on LinkedIn and connect with people, try to find networking events to go to. I try to make a daily habit of at least connecting to LinkedIn people, or, shooting emails out to people who have closed in the past, and we write stuff for us. Hey, anything you're looking at, anything I can help you with. It's just really being present and top of mind with your people. Ask them for referrals. It's really I don't want to make it sound too simple, but it's really just simple stuff of doing it every day and being active in it.
What's the number one thing that's contributed to your success?
I would just say a responsiveness, being open, being transparent, being responsive. If when somebody sends me an offering memorandum, my first question back to them is, when do you need this back? And hey, let me know when you need it back. And we had a guy a couple weeks ago, he said, man, I completely forgot. It was 11 o'clock on a Friday morning. He's like, can you give me something back by 2 o'clock? Well, yeah. Do you really need it back by 2 o'clock? We can do that. It's just being responsive and being transparent about people. I will, sometimes they will say, what do you think? A couple months ago, we had some guys that were looking at a property, and I Googled it and I wrote them back. I was like, look, you're not going to be able to get assault and battery coverage on this location. And here's why. And I just said, look, that's fine if you want to do it, but you're not going to be able to get it. It's just not going to happen, or it's going to be too expensive. So, and I think they ended up not even making an offer because of what I told them. Now, I don't know if that's good or bad, but I want them to win the deal, but I don't want them to get on a bad situation on one deal where they then can't close anymore down the road.
No, you added a ton of value to them right there. I would imagine by sharing something like that, maybe opening their eyes a little bit to the neighborhood or things that maybe they haven't thought through enough. Stuart, how do you like to give back?
We tried. I volunteer at our church. Love coaching kids in sports, anything that way. But really, probably one of the favorite things that I did was coaching 8-year-olds girls basketball here a couple months ago. Just seeing how much you can pour into kids, and they listen to you, and figuring out their strengths and weaknesses, and kind of going from that. That's a lot of fun.
Awesome. Well, Stuart, it's been a pleasure to get to know you and have you on the show and go through the ins and outs or pitfalls and things we need to know about insurance related to commercial real estate. And then I know we talked about multifamily a lot today, but appreciate your time. Tell the listeners how they can get in touch with you and learn more about you.
Yeah, sure. You can email me anytime. My email is Stuart, STUART .Moore, MOORE, and that is at TWS.TurnerWoodsmithInsurance.com. That's the easiest place to reach me. Like I said, I try to be active on LinkedIn. So you can find me pretty easily.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.